Hello, it's Big Chad, and this is the Trading Encyclopedia Daily Education playlist on my YouTube at Chad's Trading. Find me on Twitter at Big Chad and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about a two-candle Japanese reversal pattern called the Harami, both the bearish and bullish variety. I have other videos specifically on the bullish and on the bearish. This is one covering both. Here's a quick AI overview. You can, of course, pause and read this on your own time, but it's a two-candlestick pattern. The word Harami in Japanese, from what I understand, it means pregnant. And the idea is that the larger candle or the mother bar is pregnant with the smaller candle. And the idea is that momentum is rolling over. So we have, in this case, for example, a move down. You have the mother bar and then a small candle body of the opposite color. It can be the same color, but it's actually more powerful when it's the opposite color because it really shows momentum slowing down and reversing. So, for example, you have a big move up, and we get a big candle. Let's go green, 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 and then we get a red Harami. Now, with crypto, and the textbook for this is with a gap down because you get a gap down and it's completely contained within the candle. But with crypto, we have the same open and close, so we don't necessarily get the gaps. So it is technically still a Harami, but here's what it would look like in equities, for stocks. If you're trading Apple, Nvidia, or whatever, here's what it would look like with the gap down. Here in crypto, it's the same open. The open is going to be the same as the close, of course, in a 24/7 market, but it's the same concept. Here's the bearish Harami, the move up, and here's the second candle. So we've talked a lot about certain concepts in candlestick theory, like candle body progression, small body, bigger body, the trend is expanding. Bigger body, smaller body, momentum rolling, slowing down. And it's along those lines. Now, we want to look at volume. So in our earlier example of, say, a bearish Harami, if we have the move up into the mother bar, and let's say mild volume, and then, mild volume, a little bit more maybe on the mother bar, but then we get this Harami. Big volume. It showed that there was a big battle, and bears won that battle. And that is a pretty strong sign that momentum is slowing down and potentially rolling over. So there's a couple ways to play this, but what you can do, for example, when you see the Harami, you're on watch for signs of weakening. You can take a short, if you want, on the loss of the low of the mother bar. You could take a short if you want to be aggressive on the loss of the low of the Harami candle itself. There's a little bit of nuance with how you're going to play this, but it's showing you that momentum is slowing down and rolling over. And as always, we want to remember Japanese candlestick patterns are all short-term reversal patterns. You may only get some type of a move back to maybe an MA20 or an EMA 34, somewhere in the middle of the channel. Maybe the Bollinger Bands are up here and you've been a little bit overextended. It's just a way for you to study candle body progression and to get a sense of when momentum may be slowing down. Here's a bearish trend slowing down and reversing. So we have both the bullish and the bearish variety of the Harami. And this is for the Trading Encyclopedia Daily Education playlist on my YouTube at Chad's Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you, folks. And I'll talk to you soon. Big Chad's out.